Friends, welcome to yet another video in our series Finance and Investing Tidbits. In this video, we are going to focus on the advantages of a company form of business. We see so many companies around us, we work for some of them, we also do business with them. Let's explore what are the advantages of this form. For ambitious promoters who want to scale the business up, company form is very attractive. So quite often their journey begins as a proprietary firm, then it becomes a partnership, and then eventually they convert into a company form because of the distinct advantages that it offers. Proprietary form of business restricts the access to capital only to the promoter or the immediate family members. In case of partnership, it gets restricted to the resources of the partners. In case of companies, particularly those which are structured as public limited companies, capital can be raised from people who may not be even personally known to the promoters. Due to stringent regulatory framework, trust deficit can be easily bridged. What I mean by trust deficit is that the people who have capital and want to provide capital and the people who run the business, there could be a gap, there could be a knowledge gap, there could be a trust gap. And this kind of a trust deficit can be easily bridged because of stringent regulations. And therefore, a large body of shareholders may get willing to contribute their capital and share risk with the promoters. Listing on the stock exchange is also a possibility, providing seamless exit for investors. Exit is a very important aspect of investing. Further, companies have advantage of perpetual succession. In other words, they can survive beyond the life of the promoters. In fact, a company form of business can easily get passed on from generation to generations due to the seamless passing on of the shareholding interests. Thus, investors get an assurance of continuity and thus are willing to contribute capital easily. From the promoter's perspective, there is a wider distribution of business risk also, since the risk which was totally lying on their shoulders now is spread across a wider body of shareholders. Employees are also assured of their careers as the company form has much better governance than a proprietary or a partnership kind of a form, and employees can count on a long career with a company which is well governed. Further, company as a structure is easy to acquire control of, thus aiding merger, demerger, and such activities, providing a lot of flexibility in implementing business strategies. One very important advantage of company form of business is limited liability, and therefore people who are putting money into the company can take advantage of the limited liability comfort which is provided by law to them. So even if something goes wrong with the company, their personal assets are never at risk. That's a great advantage of company form. For more such videos, do explore our channel, Dr. Abhijit Fadnis. Thank you very much.